Very good evening, friends. So I hope you're all doing well, safe as well as healthy. So today we're going to start with I would say, almost the beginning of the series of Ind AS, and our journey is going to begin with the Ind AS 2 that deals with inventory valuation. Well, the reason I picked up this particular standard to begin with is since this particular standard is quite similar to Accounting Standard 2. So I thought it's a good idea to begin with the accounting standard too, a similar standard with you, where you got some insight in terms of the standard, and I'm going to take you to the journey of Indies. Now, before I start with this particular index with you, I am already carrying the text of the index with me. And whenever you begin with a particular standard, I think the very first thing you should always do is you should look at the nomenclature of the standard. Like, for example, if you look at Index 2, the name of the standard is called inventory. So the first thing you should focus always on the issue that what is inventory. So I'm going to spend a good time, analyzing the concept of what is an inventory. We're going to read the definition. And I'm very habitual that whenever I take any particular index, I always pick up the text of the standard. And I would also, advise all of you that when you try to understand any accounting standard or any Indian accounting standard, though of course at the final level you're only concerned with the index, you should always try to read the language of the standard, the interpretation, the understanding which one develops, after reading the exact language, because the interpretation is very important, and you would get a conceptual understanding when you read the text of the standard. So I think let me begin the journey, and first of all, we're going to look at the definition of what is inventory. Don't worry, we'll first of all try to understand the concept, and then the notes will be documented at a later stage. So first of all, if I look at the definition of inventory, the para number 6 defines inventory, and it says inventories are assets. Sometimes I start concentrating on individual words as well. Like, for example, in this case, you can see the definition of inventory says they are assets. Now, you would also say that's what something different in terms of saying that inventory are assets. They are, of course, reflected on the asset side of the balance sheet, so undoubtedly they're supposed to be assets. Well, I think I'll also like to pinpoint something. When we're going to go to Index 16, which deals with PPE, property, plant, equipment, if you look at the definition of property, plant, equipment, the definition begins that it is a tangible item. You will not find the word assets in the definition of a property, plant, equipment. But you can see the word assets is, very explicitly mentioned in the definition of inventory. Now, for this particular purpose, I think we should also dig further that when we say inventories are assets, then what do we mean by assets? Now, if you want to understand, what is a definition of asset, the definitions of assets, liability, as well as income and expenses is given in a document, and that is called the Framework for Preparation and Presentation of Financial Statements as per Ind AS. And if you look at the definition of asset given in that framework, well, I am not going to give you the exact definition, but I think if you look at the crux of the definition, one can definitely zero down on the fact that there are, actually two parameters which needs to be proved before you can call an item to be an asset. So if you look at the parameter, the first parameter is that you need to first prove that there will be a future economic benefit. So when you say that whether it's a tangible or it's an intangible item, and we say that that is supposed to be an asset, the very first parameter which we need to prove is that there is going to be a future economic benefit. Now, when we say future economic benefit, the future economic benefit means that you would get a cash inflow. Like, for example, the inventory will be sold at a future date. So when you go to sell the inventory at a future date, the sale of the inventory will result in a cash inflow, and that represents a future economic benefit. The second parameter, when you say that inventories are assets, for being an asset, the second parameter is control. You need to prove that you control that tangible or the intangible item. Of course, inventories are going to be tangible items, but they can be intangible items also, because many people think that when you're talking in terms of inventory, they will always be tangible items. I think, let me also clarify that this can be an intangible item as well. For example, when you're looking at let's say a software company which is trading in terms of software, now software is supposed to be an intangible item. So inventories can be tangible items, inventory can be intangible items, but at the first go, you need to prove that they are supposed to be assets. So one parameter I said is a future economic benefit. The other is the aspect of control. Now, when you say that you control that particular item, control will stem out of the fact that you've got either a legal ownership of the asset or you've got a right to restrict others from use. So either we've got a legal ownership, or we can say we've got the right to restrict others from use. If you can prove any one of the two, then we can say, yes, we definitely control. So my mind starts working on the fact that when you say inventories are asset, so the first thing which you need to prove is that whether it is a tangible item or it is an intangible item, you need to prove the two parameters. The parameter number one, you need to prove that there is going to be a future economic benefit. The parameter number two is that you control that item, and the control stems that either you've got a legal ownership or you have the right to restrict others from the use of the asset. Now, further, if you read the para number 6, it says inventory or assets. So the first thing you need to prove is that the given tangible or the intangible items are asset. Then you need to prove, it fulfills either A or B or C. Now, when you look at the point number A, B, C, let's read what is given out there. It says in point A that it is held for sale. So you can say the second thing which you need to see when you call a tangible or intangible item as inventory, you need to prove the purpose of holding the inventory. Like for example, if you look at a property plant equipment as per Ind AS 16, the very objective, the very purpose of holding the inventory, very purpose of holding the property plant equipment, they're held for use in production of goods and services generally. But when you look at inventory, they are not held for use. Inventory is supposed to be held for sale. And the word is, it is held for sale in the ordinary course of business. In simple words, we generally say that A is supposed to be a case of finished goods, what you call FG. Or it says it could be a case of B. When it says B, it says it is in the process of production. In simple words, we can say it is in a WIP stage. So the inventory is in a semi-finished stage, that is a WIP, and you're going to convert it into a finished goods and then it'll be sold. And the point number C says in the form of material or supplies to be consumed in the production process. Now, when you say in the form of material or supplies to be consumed in the production process, in simple words, we can say it is raw material. So I think if I look at the entire definition in one go, and I try to create, how would I identify whether an item is inventory or not? You would also be wondering on the concept that why are we spending so much time, analyzing the definition of inventory? What's the big deal? Let me tell you that there has been a question in the past, not in the new course, but in the old course NCA final. And incidentally, that question also came in the CA intermediate as well, where the focus was a question was asked based on the definition of the inventory itself. So that's the reason I'm spending a good time, making an analysis of the definition. And trust me, once you're very clear with the nomenclature, like for example, as I said, whenever you start studying a particular standard, you should first get a clarity of thought. That when you say inventory, you should be very clear, conceptually clear, what is an inventory. So if somebody were to say, that tell me in a simple flow of sequence, how would I decide that a particular item is inventory or not? I would say it's simply a two-step procedure. I would say it is simply a two-step procedure. Step number one, zero down on the fact that the tangible or the intangible item. I'm being very clear that inventories can be tangible, inventories can be intangible item. So step number one is to prove that the item which is tangible or intangible in nature is an asset. Now, when you say it is an asset, you need to prove the parameters. The parameter number one, that future economic benefits would arise. And the parameter number two, that you control that item either by way of legal ownership or the right to restrict others from use. Once you fulfill the step number one, then it's time to go to the step number two, and you need to look at the purpose of holding this inventory. So the purpose could be, if it is a finished goods, it is held for sale. If it is a WIP, it will be converted into finished goods and then it will be sold. Or it is supposed to be a raw material which is held for being consumed in the production process. In fact, I think the discussion is going to be incomplete, unless I take you further and take you to that particular question which came in CA final and then it came in CA intermediate. So I'm sharing that particular question with you, though that particular question, as I said, belongs to accounting standard 2, and it also came in the RTPs in May 2014 at the intermediate level. But I think it's a brilliant question in terms of appreciating the definition of inventory as per Ind AS 2 as well. So let's read the question number one in front of you. It says Alpha sells beer to customers. Some of the customers consume the beer in the bars run by Alpha. While leaving the bars, the consumer leave the empty bottles in the bar, and the company takes a possession of these empty bottles. Now this is a very fascinating sentence. When it says that the consumers leave the empty bottles in the bar and the company takes a possession of these empty bottles. When I read the word, that the company takes the possession, it's something like, once you get a possession of this particular item, you may not get a legal ownership of this empty bottle. I think talking in terms of legal ownership of empty bottle is absolutely vague. But the moment the company is going to take a physical possession of these bottle, one can certainly say that yes, you have now got the right to restrict others from use. You've got a control over the particular bottle. So I think one of the parameters in terms of the asset is getting met, that once you take it in the possession, you are getting a control over the bottle. Then he adds on further, the company is got a detailed internal record procedure and for accounting of these empty bottles which are sold by the company by calling for tenders. Now the company is got a system where they're inviting tenders for making a sale of these empty bottles. Now one thing which would definitely flow out of this information, if the company is inviting tenders for the sale of these empty bottle, I'm pretty sure you'll agree that materiality is certainly relevant out here. Inviting tenders would indicate that the sale item is certainly material in nature. So when you say that it is going to be material in nature, simultaneously it will also prove the fact, that you are definitely getting a future economic benefits. So because if this would have been something which is trivial in nature, immaterial in nature, then one cannot say that you are going to get a huge amount of economic benefit. So the two inputs which are given in the question, one is that the company takes the bottle in its possession, proves the aspect of control. Second, when you say that the company is inviting tenders, it means that there is a huge inflow, a material amount of inflow, which proves the element of future economic benefits. Now let's look at the requirement of the question. It says, decide whether the empty bottle is an asset for the company. They've been very systematic in first of all saying that is the empty bottle an asset? Because if you want to prove it to be an inventory, you need to first prove that it is an asset. Though I feel a drafting of the language is slightly tricky, because when they say inventory of empty bottle, I think they should not have used the word inventory. They should have simply said whether the empty bottles is an asset for the company. So the answer, of course, is in the affirmative. The answer is, of course, a big yes. But when you draft an answer to the examiner, you would need to correlate the two parameters of assets and tell the examiner that yes, number one, there is a control. Yes, number two, we are getting a future economic benefits. And that would prove that yes, it is an asset. Then the second requirement of the question is, if so. That means if the answer is a yes, a drafting of questions in this particular order is also sometimes quite indicative that the answer cannot be a no. It's like, the examiner says, is it an asset? And then he says, if so. So your answer to point number A has to be a yes. Because if you say no, that would mean that the second requirement is practically redundant in nature. So, there is an indirect hint also which is given in the question, which tells you to decide that yes, it is supposed to be an asset. So it says, if so, if it is an asset, whether the inventory of empty bottle on the balance sheet date is considered as inventories and valued as per accounting standard 2, or is it to be treated as a scrap and shown at a realizable value corresponding credit to the other income. Now, as I said, there is a two-step procedure in terms of proving that the item is supposed to be inventory. One is that it is an asset, which we have proved. The second is that it is held for sale. Now, one thing is very clear, the company is inviting tenders, it has got a detailed internal record procedure. So naturally, these items are definitely held for sale. But the only thing, one could actually, start discussing is that is this held for sale in the ordinary course of business? One would try to interpret, that when you say in clause number A that it is held for sale, but it says in the ordinary course of business. Now, one would argue that, is sale of empty bottles something which you're selling in the ordinary course? Because the business of this particular company seems to be the sale of beer. So one would argue that sale of beer is the ordinary course of business. Sale of empty bottle is not. But I would also say, and you would agree, when you say ordinary course of business, it would mean the main activities and also any incidental activities as well. So when you say that it is in the ordinary course, I would say the main business is selling, beer, and incidental to the main activities is selling those empty bottle as well. So one would definitely say that yes, it is held for sale and it is held for sale in the ordinary course of business, which proves the fact that yes, it is an inventory. I know you must be thinking, oh my God. So you spent almost like 15 minutes analyzing the definition of the word inventory, but I'm still not complete. I still want to add on a few more things on this particular definition. Another thing which I believe, especially at the CFI level, when you're studying any particular index, in today's time, we've got plethora of documents, which supports our understanding on index. So when you pick up any index, you must see, the things which are given in the study material of the institute. You must also see the questions which have come in the past RTPs, the revisionary test papers, the questions which have been asked in the MTPs, the mock test papers. And along with this, you should also look at the past examination questions, undoubtedly. Though there have been a total of 5 attempts so far, so we don't have too many past examination questions. But then there are two more sources which are very relevant now. One is the education material. Because in the past year, many people thought that educational material may not be relevant for the students level, and is it really meant for studying at the CFI level? I think in the recent past, even if you pick up questions in the revisionary test papers, you see a lot of questions which are now being directly picked up from the education material. So there is already an Ind AS education material issued by the Institute on Ind AS 2. So one would also take a guidance in terms of what does the education material say on Ind AS 2. Then there is another source of document, and that is what we call the Ind AS bulletins commonly. Though now the institute is not issuing any Ind AS bulletins, but they were called as ITFG. So there was a committee which was established in terms of giving some guidance on the gray areas of accounting. So when you study the Ind AS, I would say the various documents which you should use is the study material, the revisionary test papers, the mock test papers, the past examination questions, the educational material, as well as the Ind AS bulletins. So I think my analysis on the definition is going to be incomplete, unless I take you to one of the clarifications, the beautiful clarifications which is given in the education material as well. And I think let me directly take you to my book as well. And, where I have picked up this question, which is based on the definition which is given in para number 6. Now, this is the question which was given by the institute in the education material. And they said that as per para number 8 of Ind AS 2, inventories includes material and supplies. If you remember the clause number C, I think let me quickly take you to the clause number C. It says material or supplies to be consumed in the production process. Look at the clause number C or the para number 6. So it says that inventory includes material and supplies awaiting use in the production process. The question which was asked in the education material is a packing material and is a publicity material, is it covered under the clause number C of the definition? I think I'll quickly give you some inputs. Don't worry, the notes will come later. So in this particular case, the analysis which was done in the education material, they said that packing material can be segregated into two categories. One is what you call a primary packing and the other is what you call a secondary packing. Now, a question that would come to your mind is what do you mean by a primary packing and what do you mean by a secondary packing? Now, in this particular case, the institute also gave, the concept of what is a primary and what is a secondary packing. But the key essence is something which is essential. You cannot sell products in a loose format. Like, for example, if you're selling a bread, it has to be packed. There has to be a primary packing, some kind of an essential packing. Like, for example, especially in the food and beverage industry, what do you call the F&B industry, selling, for example, if you're selling Pepsi or Coke, you cannot sell them without bottles. So you can say that this is more like a primary packing, which is essential for the sale of the product. So this type of primary packing is certainly a part of the inventory. So the institute in the education material very clearly clarified that if you're looking at a primary packing, it is definitely inventory within the parameters of Ind AS 2. But when you look at a secondary packing, this is like additional packing, which is more in the nature of advertisement. Like if you remember in the recently there was been Diwali, so you see that the products have already been packed and then they are given a larger packing as well to make them more attractive to the consumers. Now it is not an essential packing, but it's more in the nature of advertisement. That is not something which falls under the definition of inventory. So which means that when you are looking at a packing material, the position is very clear. If it is a primary packing, it is a part of inventory. If it is a secondary packing, then it is not. So the question which was asked in the education material, one is regarding the packing material and the other is the publicity material. The publicity material means that you've got some kind of material which is being used for the purpose of advertisement. Now, that particular material is also not inventory in nature. And I think let me also give you another input in terms of clause number C. Once you're able to get all the concrete information related to the definition of inventory, the conceptual clarity would be, of course, at a very good level. Now, I remember, if you studied accounting standard 2 at the intermediate level, you would have also confronted another question that what is the status of machinery spare parts? Because we always confront the question that what is the treatment of machinery spare part? Is it something which is to be treated as a property, plant, equipment, or is it something which is to be treated, as an inventory under Ind AS 2? The position under Ind AS is very, very clear, though I will not take you to Ind AS 16 at this particular stage, but the position under Ind AS is very clear. It says that machinery spare parts needs to be evaluated under para number 7 of Ind AS 16. Well, I think I'm in generally, very fond of using para numbers. So you may not remember the para number, but para number 7 deals with the concept of what you call a recognition criteria. It talks about the recognition criteria for a property, plant, equipment. So the Ind AS position is very clear that if you've got a machinery spare part, you need to evaluate it under the para number 7, the recognition criteria of Ind AS 16. If it meets, I'm being very clear, if it meets the recognition criteria under the para number 7, it is to be dealt as a PPE under Ind AS 16. But if it fails the recognition criteria of Ind AS 16, then it is outrightly treated as inventory under Ind AS 2. Oh my God, I think we've got a huge level of informations with us, and I think it's time to do some documentation also on this. we've understood the definition of inventory, and we've got some clarification. So we've spent a good time, almost like 25 minutes, understanding, appreciating the term inventory. And believe me, I firmly believe, and I do that in every standard, that when I start covering a standard, I spend a good time making some good analysis out of the definitions, understanding the entire definitions. That definitely brings you a very good conceptual clarity in life. So I think this exercise is going to be quite fertile, unless we make a documentation in terms of all what we have done. So I think let's very quickly make some notes to you. So we are looking at Ind AS 2, and when I am looking at Ind AS 2, the first thing which I'm looking in terms of Ind AS 2 section number 1 is looking at the definition of inventory. And when I'm looking at the definition of inventory, I think I'm putting it like a two-step procedure in this particular case. And my two-step procedure is like number A. You would say inventory is an asset. So the first thing you need to prove is that inventory is an asset. So I would also like to add something out here, that we need to prove that the given tangible or intangible item. So it can be a tangible or it can be an intangible item. So we need to prove that the tangible or the intangible item is supposed to be an asset. And when you say it is an asset, there are basically two parameters which you need to prove. So in order to prove that it is supposed to be an asset, the parameter number 1 is, I'm putting it in short as FEB. We should be getting a future economic benefits. Like for example, the sale of the empty bottle was giving you a future economic benefit. Plus, there is a parameter number 2, and the parameter number 2 is in terms of proving that you've got a control over those tangible or the intangible item. And when you're looking at that there is a control, the control stems out of either a legal ownership. So either you are able to prove that there is going to be a legal ownership, or we've got a right to restrict others from use. So we've got the right to restrict others from use. So this is like the first part of the definition, that you would prove that the tangible or the intangible item is an asset. And when you prove this to be an asset, you fulfill the parameter number 1 and the parameter number 2. And then secondly, you can say that what is the main purpose? What is the main purpose of holding the inventory? We can say if it is a case of finished goods, then it is certainly held for sale in the ordinary course of business. And if it is supposed to be a WIP, then it is going to be converted into FG. We will convert this into FG and then we are going to sell, or it is a case of raw material. So whether it's FG, whether it is WIP, or it is supposed to be raw material. And then I think we also made a little clarifications. So I think what we can do, we can make a small little clarification chart on this. So let's make a clarification chart on the issues what we've seen in the education material. So in this clarification chart, we'll quickly make a small little chart giving the particulars, and we'll give the remarks as well. The remarks would be in terms of deciding whether this item is inventory or not. So when you're looking at the clarification chart in terms of this, number 1, we're looking at first of all what we said, there is a packing material. So we said, is packing material supposed to be inventory? We said it depends upon, are we looking at a primary packing or are we looking at a secondary packing? So if you're looking in terms of a primary packing, the answer is yes, it is inventory. But if you're looking at a secondary packing, it's not an inventory. It would be considered more like advertisement. And then we also made inputs on publicity material. The publicity material is something which is advertisement cost. Again, it's not inventory. And I also gave you another clarification, and which is regarding the machinery spare parts. So we've got another clarification which comes on machinery spare parts, though you will find this clarifications on the machinery spare part which is given in the education material in Ind AS 16. And as I said, it all depends upon you need to see the recognition criteria. We need to basically evaluate the recognition criteria which is given under Ind AS 16. And that is what I said given in para number 7. If that recognition criteria is met, then we would cover this machinery spare part under Ind AS 16, treat it as a property plant equipment. And if the recognition criteria is not met, then in this particular case, it is covered under Ind AS 2. It is going to be treated as inventory, as simple and straight. Okay, so this takes care of my first phase of discussion where we have, very deeply seen the concept of definition of inventory. Okay, now let me take you further. And I think once we are looking at inventory, the next focus, what comes to the mind is the measurement principle. Because I think if you remember even the accounting standard 2, the main thrust of accounting standard 2 is defining the measurement principles of the inventory. And I don't know if you've done that at the intermediate level or not, but today what I'm going to do in terms of Ind AS, you cannot read the para number 9 alone. The para number 9 is to be interpreted along with para number 32. Okay, we got a question. I think uh, so do you provide online classes for Ind AS? Yes, it is provided on the Unacademy platform. You can definitely check my profile out there. So I am taking the entire financial reporting classes at Unacademy platform. Yes, the entire financial reporting classes are available. Okay, so as I was discussing that when you are looking in terms of the measurement principles of inventory, you need to read the para number 9 and the para number 32 together. So I'm going to first read the para number 9, raise certain issues, and then I'm going to go to para number 32 before we document some notes to you. Now, if you read the para number 9, it says inventories shall be measured at the lower of cost and net realizable value. So I think this is something which you know at your intermediate knowledge also, that inventories are measured at the lower of the two. But my focus in terms of para number 9 is it says inventories. Now, when you say inventories, we've just seen the definition in terms of para number 6 that inventories means FG, it means WIP, it also includes raw material. So is the para number 9 applicable to all the three kinds of inventory? The answer is no. I know before that, another question would also come to your mind. You're most welcome. Another question would also come to your mind, and that is, so do we need to remember the para numbers? Well, I would say no. There would be a penalty if you write a wrong para in the exams. You may not get some extra marks if you put a right paragraph. But I would still advise that there are certain, very typical paragraphs in every standard which you should remember. Like for example, in Ind AS 2, if you ask me in the entire standard, I think it's worth remembering the para number 9 and 32 because you get a huge number of questions based on this particular area. So I think it will make good sense. Uh, okay, I think you've got another question. So only on an academy or any other way like pen drive or an app? Well, we would be exclusively now taking classes on the Unacademy platform. So you'll find me only on the Unacademy platform. But don't worry, I think since you've got an added advantage at the Unacademy platform, let me apprise you of that as well. When you subscribe for the Unacademy platform, the given advantage which you get is, first of all, when you're going to use my code, you're going to get 10% discount. That's like a monetary advantage. Secondly, you get access with the without any limits on the number of views, which is a very big advantage. You're going to get live classes, number one. And secondly, you can view those recorded classes at the backend also with unlimited views, which is one of the biggest advantages. And once you get an access over the things, multiple views can be taken. So the classes are live. I would also request you to have a look at the special classes out there as well. I'm looking for only Ind AS. Yes, you can definitely subscribe for only a particular subject as well. You can go in only for financial reporting classes also. So you got plethora of choices which are available at the platform. Do check my profile on the Unacademy platform, and you'll be able to visit and see how the classes are conducted. You'll be able to get a good information on that. Currently, of course, you'll see those classes are in a Hindi medium. So if you're comfortable with the language, you can easily do that. But I think going forward, the classes would be both in English as well as in Hindi medium. So you'll be able to catch up with them very easily. Okay, so I hope that addresses your issue well. So I was discussing the aspect of measurements of inventory. And in terms of measurement, I said, when I look at the para number 9, the para number 9 talks of inventories. And when I look at the word inventory, it seems that inventory would mean finished goods, WIP, as well as raw material. But I can tell you one thing, that para number 9 is not applicable to raw material. Para number 9 applies only to finished goods. Para number 9 applies only to WIP. Then what do we do for raw material? And I think we need to go to para number 32. So in para number 32, you can see it says material and other supplies held for use in production of inventory. They are very clearly stating in para number 32 that para number 32 deals with the valuation of raw material only, the clause number C of the definition. It says material and other supplies which are held for use in production is not written down below cost. But there is a condition. It says if the FG in which they will be incorporated are expected to be sold at or above cost. So let me tell you in simple words before I relate the language of para number 32. In simple words, I can say valuation of raw material depends upon the FG valuation. When it says if the FG in which they are incorporated, that is very clearly indicative that your valuation of the raw material is purely dependent upon the valuation of the finished goods. So I can put it in a crux. If the finished goods are measured at a cost, the raw material is also taken at cost. If the finished goods are taken at NRV, because these are the only two possibilities, either the finished goods will be taken at cost or the finished goods will be taken at NRV. So if the finished goods is taken at cost, then the raw material will also be taken at cost. But if the FG is taken at NRV, then the standard says that the raw material will be taken at cost or NRV, whichever is less. But there is another catch. I think let me read the para number 32 further. It says, however, so the general principle which is given in the initial part of para number 32 is that materials will be valued always at a cost if the FG in which they are incorporated is measured at cost, which means if the FG is measured at cost, the raw material is automatically going to be measured at cost. Then he says, however, when a decline in the price of material indicates that the cost of FG will exceed NRV. Now, if the cost of the FG will exceed the NRV, the FG will be measured at NRV. Because if the cost of FG is more, then the FG is going to be taken at NRV. Materials are written down to NRV. So which is clearly telling us that if the finished goods is measured at NRV, the raw material will also be written down to NRV. But NRV is computed for items, which are sold. But we don't sell material. Material is held for the purpose of being consumed in the production process. So paragraph 32 further adds on, in such circumstances, the replacement cost of the material is the best measure available for the NRV. So I think now we can definitely, conclude a crux out of the para number 32, and we can say material valuation is purely dependent upon FG valuation. So there are two cases. Case number one, FG is valued at cost or the FG is valued at NRV. If the FG is valued at cost, raw material is going to be valued at cost itself. I don't even care about the NRV of the material. But if the FG is taken at NRV, raw material will be taken at cost or replacement cost, whichever is less. Mind the words. Now you would say, what do you mean by replacement cost? Well, replacement cost means that if I were to, procure a material currently today, what is the prevailing prices at which you can actually buy the raw material at the current date? So that is called replacement cost. So I think we've understood one very important issue, and I think I want to make a documentation chart on that as well. So we can say in terms of the measurement principle, we can certainly make a chart like this. So we can say when you're looking at the measurement principles of inventory, we can say the measurement principle of the inventory can be segregated in terms of two things. We can say number one, it is supposed to be either measuring in FG or measuring a WIP. I'm segregating the raw material because there are two different paranumbers which are dealing with this particular concept. So if you're looking at a measurement of FG or a WIP, then we are applying the paranumber 9. And the paranumber 9 is very clear that you need to measure the inventory at cost or net realizable value, whichever is less. And when you're looking in terms of raw material, then I can say we are applying the concept of para number 32. And para number 32 makes it very clear that the valuation is purely dependent upon FG. So we can say raw material valuation depends upon FG valuation. We can say it depends upon the finished goods valuation. So we can say it depends upon the finished goods valuation, and we can split this into two different kind of cases. So we can say that if you're looking in terms of that the FG is valued at cost based on para number 9, then raw material will of course be taken at cost itself. And the case number 2 is when the FG is measured at NRV, then the raw material is going to be measured at, remember, cost or replacement cost, whichever is less. It is not NRV, it is cost or replacement cost, whichever is less. Now, at this stage, one would also get another insight. Sometimes the examiner will give you a question and say, measure the inventory, measure the raw material inventory, and measure the FG valuation. Now, what is the interpretation of this particular para number 32? You should never measure the raw material first. Unless you have calculated the measurement of FG, you cannot measure the raw material. Since the measurement of raw material is dependent upon the measurement of FG, you will first measure the FG and then measure the raw material. So this is on the measurement principle. Now, let's, I think, take the journey forward and let's discuss something further. How does the Ind AS 2, move on further? Once we have zeroed down on the fact that para number 9 and para number 32 is dealing, in terms of the measurement principle, the next issue which comes to the mind is what is cost? The next agenda of discussion is what is cost. The next agenda of discussion is what is NRV. I would like to say something at this end. Though Ind AS 2 is a pretty easy standard, and students may not face much difficulties in this particular standard, but when especially you come to bigger standards like business combinations, consolidation, financial instruments, or maybe standard on revenue like Ind AS 115 or leases, the biggest problem what comes is that one is not able to relate the entire issues which are given in the standard. And for this particular purpose, what I generally do, and I would also advise, that you should also create mind maps for your last minute revisions, because at the last stage, it is very difficult to go through, finer details like this. So you should try to condense the movement of all the issues in the standard in, maybe around 1.5, 2 pages, like a standard like Ind AS 2. One could devote, let's say, around a 2 pager which summarizes the entire things. So it gives you the entire concept with any crucial kind of issues all at one particular place. So once you look at those 2 pages of the mind map, it immediately gives you the thing. Though of course I cannot do the mind map right at this stage because I am not yet complete with the standard. but you should get into the habit of doing these things so that you can develop a sequence of flow of the issues which are going in the particular standard. So as I said, the third issue, like my section number one was dealing with, what is inventory? That was section one. Then we dealt with the section number two, that what is the measurement principle? Now we're dealing with the section number three, what is cost? Now, when you see what is cost, interestingly, we can say that there are three kind of cost. Generally, when people look at the inventory valuation, their mind starts working. There are two kind of costs. This is included and this is excluded. But I would say in terms of cost, the standard gives us three kind of cost. One is called cost which is included in inventory valuation. This is technically called a product cost. When we use the word product cost, the word product cost means something which is included in inventory valuation. Then there is a list of cost which is excluded. Then there is a list of cost which is excluded in inventory valuation. And we technically use the word called a period cost. Now these terms are also what we use in cost accounting as well. And these are called period cost. Why they're called a period cost? Because these are charged to the period. They are charged an expense to the period in which they are incurred. So they're not taken as a part of the inventory valuation. And then there is another cost which may be included or may be excluded. It all depends. So this is, especially we can say it may turn out to be a product cost if it is included, or it may turn out to be a period cost if it is not included. So Ind AS 2, gives us a guidance on three categories of cost. One list which is included, another list which is excluded, and one which may or may not be included. And as far as the NRV is concerned, there is a definition of NRV which is given in the standard. So let's do one thing. I think let's first of all show you certain inputs in the Ind AS 2, which talks about the cost which is included, what I'm saying, product cost, the cost which is excluded, what we say is a period cost, and it may or may not be included. So let's, I think, take you on the text of the standard once again. Now, if you look at the para number 10, you can see the heading above the para number 10, which very clearly says cost of inventory. Now, when it says the cost of inventory, para number 10 gives you all the kind of cost which is included. It says the cost of inventory shall comprise of number one, the cost of purchase. Number two, the cost of conversion. And number three, it says other cost which is incurred in bringing the inventory to present location and condition. So we can say when you're looking at cost, there are three broad categories of cost. One is a cost of purchase, one is a conversion cost. Conversion cost is nothing but you can say it's basically direct labor, plus you can say the factory overheads, what we also call production overheads or manufacturing overheads, irrespective they are variable or fixed. Though trust me, if you relate this to your knowledge at the intermediate level, and you would say, is the valuation, whatever is taken in cost, is it absolutely similar to what is given in the accounting standard 2? I would say yes, it is absolutely the same. Whatever is given in accounting standard 2, as far as the cost of inventory is concerned, it is exactly similar what is given in Ind AS 2. But that doesn't mean that we are not going to talk on those things. But not today. I think since we are spending a little time on the introduction of the standard, I wanted to lay a little more emphasis on what is inventory and the measurement principles, and at the same time making a little run through in terms of other things. So, then the standard gives you the focus in terms of each and every component of the cost. It tells you about the cost of purchase, that's one. It tells you about the conversion cost, and it also gives you inputs on the other cost as well. But let me also show you the second category of cost, which is given in para number 16. Para number 16 is now giving you a list of all those costs which are not included in inventory valuation. What I technically said is supposed to be a period cost. And if you read the examples which are given in para number 16, they're absolutely similar to what you've done in accounting standard 2. The abnormal wastage, the storage cost unless it is a necessary part of the production process, the administration overheads, the selling and distribution overheads. These are all period costs which are not included in inventory. But I'm sure you would be keenly interested in knowing about the third cost, which I said, may or may not be included. And that is given in terms of para number 17, which also gives us a little insight in terms of one clarification which generally I see students a little confused about, and that is borrowing cost. If you look at the para number 17, the para number 17 talks about Ind AS 23, the borrowing cost. Now the question what comes to the mind is, you know uh, is inventory a qualifying asset? Ind AS 23 deals with the what you've done at the intermediate level. AS 16, that is borrowing cost. Trust me, many times you ask people, that is inventory a qualifying asset, and I don't know for what reasons. People sometimes immediately say, no sir, inventory cannot be a qualifying asset. And if you ask them the reason, they say, sir, this is a current asset. How can a current asset be a qualifying asset? So I think at the first instance, let me clarify that inventory, in spite of the fact it's a current asset, can be a qualifying asset. Because if the inventories take a substantial period of time to bring them into a saleable conditions, they can certainly be a qualifying asset. So if your inventory is a qualifying asset, the borrowing cost will be included in inventory valuation. And if it is not a qualifying asset, then the borrowing cost will not be included. So the para number 17 is giving you inputs about that cost which may or may not be included in the inventory valuation. So that was little inputs about the concept of cost. So where I've given you that there is a detailed inputs given with reference to the cost, what is included. So we can say in terms of what is included are three kind of cost. So if somebody would ask me that what is included, I would say there are three kind of cost. One is a cost of purchase. One is a cost of conversion. So I'm putting it as a conversion cost. And one is the other cost which is incurred in bringing the inventory to the present location and condition, though the parameters are absolutely similar what you've done in accounting standard 2. And what is excluded, I give you examples in terms of the para number 16, which give me a list of items which is a period cost, and I also give you that it may or may not be included, and that is supposed to be a borrowing cost. It all depends upon whether it's a qualifying asset or not. I think now a little word on the concept of NRV. So I think let's do one thing. Let's take you to the definition of net realizable value in the para number 6, where we are given the definitions. So let's have a look at the definition of NRV, that's called the net realizable value. Now, when we look at the definition of NRV, it says NRV is the estimated selling price. Now, there is a very good reason in terms of using the word estimated. People generally believe that when you're looking at an estimated word, it means that you would look into the most recent sale of inventory on the balance sheet date, and you would consider the recent sale as a base in terms of measuring NRV. Of course, that is correct. But I can also tell you that the word estimated is used because there is a good connect in terms of Ind AS 10 and Ind AS 2. Now, what is the connect in terms of Ind AS 2 and 10? I'll just slightly give you an inputs at this stage without getting into much depth, because one can take NRV as a separate issue and discuss the clarifications which are given on the NRV concept. But imagine that when you measure the net realizable value of the inventory, apart from looking at the most recent sale, on the near the balance sheet date, you would also incorporate, the events which have taken place after the reporting period. So the impact of Ind AS 10 is also to be taken into account, and that is the reason the definition of NRV uses the word estimate. So it says it is the estimated selling price in the ordinary course of business, less estimated cost of completion, and there is another cost which is reduced, which is called estimated cost necessary to make sale. If you technically ask me, I would say this definition of NRV is something which is applicable to finished goods, is applicable to WIP, I would say. Because when it says that NRV is estimated selling price, that's one, minus estimated cost of completion. The estimated cost of completion is something which is going to be relevant in terms of WIP. Finished good is already complete, so there is no estimated cost of completion. And when you look at the estimated cost necessary to make the sale, this is something like, maybe you're giving a sales commission to the agent in terms of making the inventory. I think let's quickly take an example to understand how you would calculate the net realizable value for FG as well as for WIP. So this is just to give you a very quick inputs on the computation of NRV. Imagine we are looking at a finished goods, and imagine we are looking at a WIP. Let's say the cost of FG is supposed to be 100, and let's say the cost of WIP is 70. So let's say the cost of FG is 100, and let's say the cost of WIP is 70. And let's give you the calculations of the NRV of FG. Now, what will you do for the calculation of NRV? You will take the estimated selling price of the FG. Mind it, you will take the estimated selling price of the FG. Let's assume that the estimated selling price of FG is 120. Now, from the FG, you just need to reduce one thing, that whatever is the estimated cost necessary to make the sale. I'm presuming that there is no cost necessary to make the sale. Let's say there is no sales commission. So we can say the NRV is 120. Now, another misconception, which people generally get, and I think I like to give a clarification, when they are calculating the NRV of WIP, they believe that we need to take the estimated selling price of WIP. No, we don't sell WIP, so there is no question of considering the estimated selling price of WIP. To calculate the NRV of WIP, we will take the estimated selling price of the FG itself. We will take the estimated selling price of the FG as well, minus the cost of completion. Now, if you look at the cost of completion, it is pretty simple and straight to apply. If you see the cost of FG is 100 and the cost of WIP is 70, which means what? That we need to incur another 30 rupees to convert the WIP to FG. Because if you've already incurred 70 rupees, you need to incur another 30 rupees to convert the WIP into finished goods. So the cost of completion is supposed to be 30, and there is no cost necessary to make the sale, which is nil. So we would get an NRV of 90. And one thing which I like to add, just to give a little more clarification. You can compare the cost of FG versus the NRV of FG. Mind what I'm saying, a very important issue. You can compare the cost of the FG versus the NRV of the FG. But can you compare the cost of WIP versus the NRV of FG? Of course not. So, mathematically, there are two alternatives one would do. Now, see what one can do. Mathematically, either you add 30 to this, that is one alternative, then 100 becomes comparable to 120. Or mathematically, what you can do, you can reduce 30 from NRV. So this is what you can say is simple basic maths. So why does Ind AS 2 say that when you're calculating the NRV of the WIP, you should reduce the estimated cost of completion? Because you cannot compare the NRV of the FG with the cost of WIP. So either you add the cost of completion and then compare it with the NRV of FG, or what you do, you simply reduce the cost of completion from the NRV and then they become on a comparable basis. Okay, so I guess I gave you a very brief introduction in terms of Ind AS 2, and my focus today has been largely in terms of two areas on Ind AS 2. One is we've spent a good time understanding the definition of inventory, where I said that there are two aspects in terms of the definition of inventory. One aspect is that the focus is that you need to prove that item which is tangible or intangible in nature is an asset. Now, when you prove that it is an asset, you need to prove the two parameters. One is that you're getting a future economic benefits, and second is that you control that item either by way of legal ownership or by way of right to restrict others from use. And then I said the main purpose of inventory is that it is held for sale. If it is an FG, it is certainly held for sale. If it is supposed to be WIP, it will be converted into FG and sold. Or it is a raw material which is held for consumption. I gave you clarifications with reference to a packing material, with reference to primary packing material, which is inventory, secondary packing material, which is not inventory, and a publicity material, which is not inventory. I also give you inputs about the clarifications of the machinery spare parts as well. And then I give you inputs on the concept of measurement principles of inventory, where I laid a focus on para number 9 and para number 32, clearly demarcating that the valuation of FG and WIP is based on para 9 and the valuation of raw material is based on the para number 32. So I think that was an introduction to the Ind AS 2, and I think that serves the objective what I had today. I guess the question stands answered. I guess no further questions coming in. So I think before I take leave from you, I thank you all for joining and listening to the lecture on Ind AS 2. We'll definitely be connected with you with some more Ind AS coming on the YouTube channel of Unacademy. And if you want for some more detailed videos, you're most welcome to come and have a look at the special classes on the Unacademy platform as well. So I think time to bid goodbye to you. Thank you for joining. Take care and goodbye.